What's up, guys? Welcome back to the channel. We're going to talk about market updates today, where Bitcoin's at, and what to expect in the next coming weeks. I still think the bottom isn't in yet, but it's important to note that a lot of these bottoms, you don't have to time them perfectly in order to make money. So it's actually a pretty good opportunity right now if you wanted to invest. But just note that Bitcoin could still crash to 50K and at worst even to 40K. But it's fine. Like if we look at historical cycles, these entries are still pretty good. So without further ado, let's get into the charts and let's see what the charts are saying and what to expect in the next coming weeks. So this is basically the price of Bitcoin that we're seeing right now. This is the price risk model that we made. So this is like an indicator. 1 means that it's overvalued again. 0 means it's undervalued. And it kind of just like goes into this phase of going up and down, right? We have another model which is backtested, uses the same model, but it doesn't have that look ahead bias. So it uses every period in time. What you can see here, it's actually pretty low now. It's already at the 0.31 risk level. And historically, actually, this is where it's bottomed in the past. So you can see in 2018, it bottomed at around this level, zero point 0.3 risk. And in 2020, during the pandemic crash, it also bottomed slightly past the zero point 0.3 risk. Last cycle, it hit this zero point 0.3 risk a bunch of times, but it actually bottomed down here at 0.2 risk, right? So if it follows last cycle and we have one more major extension, it's going to hit zero point 0.2 risk, which is around $55,000 per Bitcoin. But the difference between 55,000 and 60K isn't that huge. And at the worst case, it's going to hit $40,000 if it hits all the way down to the zeroth risk. So historically, when we look at the backtested price, it hasn't hit zero risk yet. But if you're looking at the current prediction, taking into account all data, it is saying that it is possible that it reaches the zeroth risk. I tend to use the backtested values mainly because it's there's less bias in terms of how the model works, and you can see how the model works over time. When I'm looking at this, it seems like there might be one more leg down, because if you look at the distribution of this graph, the tops are getting less top and then the bottoms look like they're getting lower, right? So it looks like there's like some kind of trend in how the data is presented. So given that, I think zero point 0.2 is very likely, and I think 0 is possible, but I don't know how likely that is. If we look at other indicators right now, we do see that also again. So this something I talked about in previous video, the realized price. If you look at the realized price, just look at the last few months. Yeah, the realized price at 54K, and then the delta price is at around 43K. So where the bottom is going to be. Historically, this has reached the realized price. So if we look at the past cycle, it has passed the realized price and the delta price. In the pandemic, it didn't reach all the way to the delta price, but it reached the realized price. So I definitely think the realized price is pretty possible, highly likely. But who knows if it's going to reach the delta price, right? And yeah, so basically that's where the cycle's at. When we talked about this, we said that the cycle's probably going to be around late September or early October, early to mid October. So that's where I expect the cycle low to be, and that's usually just because of time-based performance. So if you look at all-time high clusters, and this just shows you the all-time highs, right, and the cycle lows. If you actually look at the cycle lows, it just shows you how many new lows it took for it to get there. Right now we're at 27. In the past two cycles, it was 38 and 41. So it is gonna take a little bit more time. And also sequentially, if you just check the number of days from top to bottom from previous cycles. So this is the top to bottom. Yeah, I mean I talked about this again in previous videos. But I'm just reiterating for those of you who don't know. So yeah, top to bottom, there's around 48 bars. If you go here, this is around 56 bars, and just putting that to the next cycle from top to bottom, 56 bar, this would give us around like November. Sorry, just zoom in. But this will probably take us around October or September. So here, just get to the bottom of this, and then if we just do that here, yeah, so that would be around September 26th, 20th of September, right? So that's where we're going by the time-based moves. If you haven't watched the last video, I talk about this a lot more in depth. But okay, this video I want to actually give you a heads up on the buying strategies. This is something that I haven't covered too much. So Bitcoin might reach 50K and it might reach worst case 40K, but that doesn't mean that the current price is bad. Like in terms of the current movements, when we look at the backtested values, this is pretty low. There's a small chance that we end up missing the boat and then it goes all the way back to all-time highs, right? So if you're waiting for the absolute bottom and you're waiting for a 40K level and it never comes, that also comes with risk. So the best buying strategy actually is to just spread out your buys. So this is a graph in the website. This black line is the distribution of how many days Bitcoin spends at that risk, and the pink line is how you would spread out your buys. So you can actually decide to spread it out equally. You distribute like 12% across these risk levels. You can distribute to it linearly, or you can make it exponential. Up to you. The point of this is, if you distribute your buying across these risk levels, you have some exposure to Bitcoin, and you're exposing yourself to that price, knowing that it can go lower, but if it goes lower, you have more money to put in, right? I think it's always okay to have some cash position, because you never know when good buying opportunities are going to arise. So if you actually do this, you can set a highest risk at which you're going to start investing. So let's say you want to start investing at at 0.3 risk, or at zero point 0.4 risk. So, and then you just decide what percentage on each risk level you're going to do in each of these risk levels. So for example, if you spread out at 0.3, you start buying. If you do an equal distribution, you're gonna be putting around 25% of your portfolio at each risk level at the back tested. And that would give you an average buy price of 57K. Assuming the backtested risk bottom is 0.15, you would have an average buy price of 57K. And that's only 10% away from the predicted bottom, right? The predicted bottom for backtested is 51K, because historically that's the lowest it's ever been. So you're only 10% away from the bottom if it reaches the bottom, but you mitigate the risk of not investing, right? So if it only goes to zero point 0.2, you would have still invested 75% of your portfolio, and you would have been able to capitalize on that move, right? Versus if you just all in at like 0.15 risk, then you wouldn't have captured all that value, right? So just to illustrate this, again, if we go back to the price of Bitcoin, if Bitcoin ends here, like this is the bottom, it goes all the way up. If you have zero exposure, then you wouldn't have been able to capitalize on that move. But if you invested 25% right now of your like cash allocation, then you would have some exposure, so that if it goes up, then okay, we missed the boat on the 75% of our capital, but a 4x on the 25% is still great, right? And then we can decide on where to put the cash position in other assets eventually, right? Maybe we rotate back into stocks. But the point is that you want to spread out your buying so that you're not fully risking missing the boat and all inning the bottom, because it's almost impossible to time the bottom perfectly. So I actually have some exposure right now. I have like around 20% of my cash allocation right now at 60K. I'm still waiting for the bottom around September or October. If the bottom does not appear up till mid-October, I'm probably just gonna put in the last remaining of my investments, because I think this is already a really, really good time, and the optimal window is in the September to October timeframe. So yeah, I just want to caution everyone. Just because it's not yet the bottom doesn't mean that you can't make money. So before, actually, Bitcoin was at 19K, right, and it dropped all the way down to 15K, right. But the people who bought at 19K didn't really care. Bitcoin went all the way up to 110K, and just that small difference wouldn't have mattered too much. So you just have to hedge your risk and just expect the moves as they go, right? So right now I do have a little bit of hedge. In September, October timeframe, I'm probably gonna put in the remaining of my cash position that I want in crypto. And yeah, let it ride. If I miss the bottom, like if it bottoms after October, that's fine. A few percentage moves, like 20%, is fine. As long as you know what your average buy price is in relation to the cycle low, right? So, for example, if we switch this to current, the cycle low it's predicting is around 40K. If you think this is the prediction that makes more sense, then, if having an equal buy price at like 0.3 risk still gives you at a 50K average buy price. And that's only 22% away from the low. But, if it goes all the way up to 200K, then it wouldn't have mattered, right? So, that's how I approach the buying process. Yeah, just make sure to hedge your risk and know what you're getting yourself into. Because it is tempting to like say that, oh yeah, I timed the bottom, but there's a difference between timing the bottom and making money, right? The difference between 4x or 5x is pretty negligible in the long run. So that's what I want to caution you guys. Yeah, so basically that's it. Also, if you want to check out these charts, you can go to my website, Lofi-Ledger.com. All the charts are publicly available, and I actually have these intro flows. So if you look at these, if you press this I button, it actually walks you through how to read a lot of these charts. So I'm still working on this so that you guys can use it. But basically, it just explains each chart so that if I don't get to explain it, you can actually just go back through the charts, know what it's saying. And yeah, we also have like an alerts feature here. So if you want to make an alert, notify me when Bitcoin hits like below 0.2, and then it'll give you an alert. It'll send out an email just alerting you that has happened. So yeah, if you guys like and subscribe this, if you guys like this video, like and subscribe, and I'll see you guys next time. I'm also building a mobile app to get all of this. This will all be free until the bottom. So around October or around September it'll start becoming paid. So if you guys want to, get an account now, yeah, that will be great. If you guys don't need an account, yeah, you can do it after October, but it won't be free anymore. Yeah. Anyway, see you guys next time. Like and subscribe, and yeah, see you guys.